Morning, everyone, and welcome back. I'm Chris Cochran, founder and CEO of Fluid, and your host for today's session. I'm joined again by Michael Hewson and April Nicholson of Graphene Economics. Thanks for joining us. Before we get started, just a quick note. Please do use the Q&A function throughout the session. If something sparks a question, just pop it into the chat as we go. We'll pick up questions during the discussion rather than waiting until the very end. If you joined us for the first webinar, you'll remember that we spent a lot of time talking about the forces shaping transfer pricing, increasing scrutiny, growing data requirements, more audits, more controversy, and of course, the growing role of technology and AI. What struck me afterwards was that many of those themes weren't actually technical transfer pricing issues. They were operational issues. How do you collect the data? How do you monitor what is happening? How do you prove that your policy is actually being implemented? How do you respond when questions come years later? So today's discussion is really about that next step. How do organizations move from recommendations and policy to operational enablement? I spent some time going back through the research and the discussions from our last session, and one theme kept jumping out to me. Transfer pricing is becoming increasingly operational. Historically, the focus was often on getting the policy right, the benchmark right, the documentation right. But increasingly, it feels like organizations are being challenged on something different. Can you demonstrate how the policy was implemented? Can you explain the data? Reproduce the calculation, and can you provide evidence for the outcome? Michael, is that a fair observation? Are you seeing organizations being challenged more on operational execution than purely technical positions?
Chris, last week I was in Morocco for the IBFD Africa Tax Symposium. And in between the various sessions, I had the opportunity to speak to the head of the Tax Appeals Tribunal in Uganda. And I said to her, you get to evaluate transfer pricing matters from both perspectives, seeing what the revenue authorities are arguing, what the taxpayers are arguing. I said, are there any trends that you note over time that the taxpayers keep, tripping up on? She paused, she looked at me, and she said, evidence, 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 evidence. And Chris, I think for me, those four words sum it up so nicely. How do you prove the reason for the decision that you made many years ago? How do you prove the support for the pricing that you're trying to apply? How do you prove that that really is the correct price that you calculate? So 100%, it's how do you have that evidence to substantiate what you're actually trying to achieve? And that is where the head of the Tax Appeals Tribunal said that many of the transfer pricing matters are falling down for taxpayers.
That's very interesting, Michael. So, one of the things that I was most interested to revisit was the outcome of the poll from our previous session. And I think this supports a large part of what you've just said. When we asked participants in episode 1 to share their priorities, this is how they responded. And what struck me wasn't necessarily what ranked highest. It was that what those positions had in common. Data quality and architecture, operational transfer pricing, they're all execution challenges. They're all symptoms of organizations trying to operationalize increasingly complex requirements. And interestingly, AI ranked lower, not because it isn't important. In fact, I think most organizations recognize the potential, but before AI can create value, organizations first need confidence in the underlying process. Confidence in the data, in the controls, and in the outcome that they're going to get to. What we're going to explore today is that AI and evidence and your controversy management becomes most powerful and effective once those foundations are in place. April, when you look at these results, does that resonate with the conversations you're having with clients?
Yes, very much so, Chris. As you'd mentioned, the top priority that came out from the poll in our last webinar spoke about controversy. And these are very much the evolving conversations we've been having with clients. So in the past, it was more, what was your policy? Okay, how do we document it? How do we make sure that we submit the documents on time? Very much more compliance focused. But the conversations that we are having lately is very much so around controversy. So other clients are currently in the thick of controversy matters, so responding to audits, responding to requests for information, or they have come out of the process of an audit and now they're thinking, going forward, how do we look at our transfer pricing differently, or how do we better prepare ourselves for when the next set of questions and the next set of information requests come from revenue authorities.
Very interesting. So I think something that often gets lost in transfer pricing discussions, or not necessarily lost, but we can get too focused on transfer pricing as an island. And I'd say it's part of a broader system. When people hear transfer pricing, they often think about just one thing, maybe management fees, royalties, intercompany services, but the reality is actually much broader. There's goods, services, financing, intellectual property. And then those same transactions start appearing elsewhere in tax reporting cycles, etc., like customs and tariffs and country by country reporting in Pillar 2. What interests me is that organizations often manage these as separate activities, different teams, different processes, different spreadsheets, yet they're often built on exactly the same underlying transactions and data. April, is that part of the challenge we're seeing, that transfer pricing teams have to think not only about the transaction itself, but also about the downstream impact on customs, CBCR, Pillar 2, for example?
Yes, Chris, very much so. So as you rightly mentioned, I mean, what you can see on the transactions on the left-hand side, those are very common intercompany transactions we see happening in multinationals. So, you've got your intercompany purchase and sale of goods, where it's important to support the arm's length pricing. You have intercompany services, where it's important to demonstrate the appropriate cost-based allocation key and arm's length markup has been applied. You've got your tangible property transactions, intangible property transactions, where there you are required to support either a license fee or residual profit that's being allocated amongst entities. So that's one element of the transfer pricing landscape. But then there's a lot of interplay with other elements, as you mentioned. So you've got your customs, very much so when you're looking at the pricing and valuation of your cross-border, sales transactions. There's a lot of interplay with the whole concept of market-related pricing, and even adjustments from a transfer pricing perspective need and can impact on the customs valuations and how you then account for those and report back to the revenue authorities. An additional layer on top of that is your country-by-country reporting. So there you need to disclose things like your intercompany revenues, the profit earned by the various entities across your jurisdictions. Profit often plays into the transfer pricing policies that are set. That then impacts on the taxes that are paid and declared in country. And then the layer on top of that now, more recently, is your Pillar 2 requirements. So a lot of that data that you're reporting for country by country purposes is being used to determine whether or not multinationals can be in or out of scope for the transitional safe harbor mechanisms under Pillar 2. So what the key theme that we're seeing with this is that it's a very interrelated environment that multinationals need to navigate, and there's a lot of reporting and a lot of data that's required when you are pulling all of this data together, and also making sure that it's cohesive and it addresses the various aspects. So in the middle, you've got your TP manager, and they need to sort of manage that pressure.
100%. So I mean, it's a lot of moving parts to try and keep your finger on, right? And you're receiving pressure from different parts of the business. There's the commercial guys who are trying to put agreements in place. You've got finance teams, you've got operational teams you needing to get information from and provide information to. And I think it just becomes a lot of moving parts and a lot of stakeholders to manage. And that's what really excited me about the Graphene Economics, the transfer pricing model. I think what really excited me is that it gives structure to something that often feels quite fragmented. Most organizations don't struggle because they lack a policy, or they struggle because governance sits in one place, data sits somewhere else, calculations happen somewhere else, and evidence only really starts to get assembled at year end. What I like is that this model brings those pieces together. Michael, before we ask people to assess themselves against the model, can you talk us through how you think about it as a whole? Like, what problem is it solving for tax teams, and why do these capabilities need to work together rather than independently?
Transfer pricing, it's become such an area of interest across many different organizations, and it's also, when things go wrong, it can become a very stressful environment to be in for any tax team. Now, what is really helpful, this particular framework helps us to, as you say, have structure to make sure that we're addressing the core components of an effective transfer pricing system. Now, we've got governance and policy stewardship, the implementation, the data element, what information, what values are we using, who's making decisions, and then what evidence is there at the end of the day. Let me break this down for you in a few examples. So, a good friend of mine, I chatted to her about a year and a half ago, and she's responsible for all the tax activities for their group across Africa, and they're in many different entities, many countries in Africa. And she was telling me about all the transfer pricing controversy matters all across the group in Africa. And I said to her, does it not cause anxiety for you when the executives come and say, why is there another transfer pricing matter and another transfer pricing matter and another transfer pricing matter? She looked at me and said, no, Michael, I sleep very well at night. And I said, what? And what she said is, what we do is we have a model that we apply globally. And if I have any concerns in a particular market, I elevate those concerns and I address the concerns with my boss at a global level. And the business then makes the decision. Are they willing to take that risk in that particular market? And it takes the pressure off me as an individual. I'm responsible for doing my role, identifying the risks and managing what I need to do, but I'm not taking on this extra anxiety for a commercial decision that business is taking. And that stayed with me, Chris, because I think a lot, the people on the call, yourself, me, April, it's also about how do we manage the anxiety that comes with the complex environment that we try to deal with. So governance and policy stewardship talks about what's the right transaction model to be applied and who needs to make the decisions across the group. And when decisions need to change, who needs to be involved, and thinking carefully about that. Agreements, systems, and structures. One of our clients said to us recently, well, the model that we helped them design and determine, they've implemented in most countries, but they think in Asia, they actually don't think it's been implemented properly. And so there's shortcomings and challenges. And that talks to, the KPIs that you have, talks to the intercompany agreements, it talks to how invoicing is done, talks to how everything is actually implemented in practice. The data foundation and traceability. Now, for some of our clients, especially the really big companies that have operations in multiple different countries with lots of different complex transactions, we find that more and more they're the ones that are saying that this is the big complex issue. It's taking a long time for them to get the related party values. The related party values are not reconciling very easily. It's difficult for them to compute what the amounts are. It's just way too complex. And this is causing big backlogs when revenue authorities are saying, okay, you gave us these values, what's it made up of? And then, it looks like they're being uncooperative because they're saying it's going to take us weeks to try to trace what these amounts relate to. It looks like they don't have their house in order. So especially really big organizations, this one has become a really big thorn in their side. Decisioning, monitoring, and execution. Now, an example on this one is, one of our clients, a manufacturing company, they've got a financial manager who is responsible for managing the intercompany prices at a product level. And during the course of the year, depending on what's happening in a particular country, they might adjust the price up or down. And then at the end of the year, what we typically find is that the prices are outside of the ranges. So what it means is there's someone inside the organization adjusting the pricing, but it's only being monitored at the end of the year. And there's a disconnect between the decisions being taken on the pricing and the monitoring and when that is taking it. And that is causing unnecessary transfer pricing headaches and anxiety. Finally, that evidence, the controversy and uncertainty, where decisions are taken or things are done, but there isn't the records being kept and retained, or it becomes really difficult to go back and improve. So these are all areas where, to the extent that organizations can have a plan to address all of these, the level of manageability is going to improve considerably. Now,
Thanks for that. Yep.
not the same amount of attention is required across each of these for all organizations. You've got to consider what makes the most sense for different businesses. But as a whole, this framework is really, really good for a sustainable transfer pricing model.
Agreed. And I think so. If you look at it, there's information flowing up and down the framework, right? And different stakeholders that are managed through the model. So I think we're going to get into a bit more detail on the build and how to actually execute these models, or this model, as we go. But before we do that, we want to just run a quick poll to see where our audience believe where they are or their organizations are in this context. So for each pillar, if you can just, there'll be a poll that's popped up on your screen. Just select the option that most closely reflects your current reality. We've got informal, emerging, defined, or embedded. You'll see that there are 5 questions, one for each of the elements. There are no right or wrong answers. So the objective isn't to score the organization, it's to understand where maturity exists and where opportunities still remain. So April, while everyone's completing the assessment, when you look across these 5 capabilities, do you typically see one area emerging as the bottleneck in the end-to-end model?
Certainly, Chris. So earlier in the episode, you spoke about a shift to operationalizing transfer pricing and how that is also linked to the execution. But what we are very clearly seeing is that at the heart of the execution challenge is data, right? So what we are seeing across multinational groups is the difficulty with multinationals and organizations to be able to extract, reconcile, and defend the operational TP across multiple jurisdictions, and also having to juggle, between the compliance aspect and stakeholder management. And where we see a lot of friction, you get your things like your fragmented ERP environments, you have your inconsistent transaction recording and reporting across your various jurisdictions as a result of that. You have your manual Excel-driven processes, and that also results in your limited audit trails. So what are we seeing is that, very much so in line with, some of the observations in the poll that's come out, that data is definitely a bottleneck, and it continues to be so. And, that leads to difficulties in slowing down your compliance process, potentially having your audit risk, and, then difficulty in effectively operationalizing your transfer pricing.
Thanks for that, April. I don't know if we've got the results of the poll available yet. There we go. So let's see here. We've got TP ownership is informal and person dependent, often on governance and policy stewardship. Agreements, we've got a bit more of a spread. I think that's probably quite an understandable thing. I think people often focus on agreements, and it's a core part that needs to be there. Informal data foundation, a lot with emerging, defined, and some with embedded, which is fantastic to see. Decisioning and monitoring execution. We've got also emerging out. So yeah, there's a good spread of maturity, I guess, across the participants. I think one of the things I've learned over the years is that these operating models make perfect sense in theory. But the real test is whether they stand up in practice. So before we move into today's use case, which will kind of take us through how to build out this model, I just wanted to spend a little bit of time on the data foundation layer, because it's where so many of the earlier themes start to converge. So data quality, traceability, operational execution, evidence, audit readiness. At Fluid, we often see organizations collecting similar information multiple times for different purposes, whether it be for transfer pricing, CBCR, Pillar 2, audit support, tariffs, internal reporting. And every time that happens in a separate spreadsheet or a separate process, sorry, excuse me, complexity grows. The opportunity is to create a structured data foundation that the tax team can rely on and reuse. And what's interesting is that once that foundation exists, entirely new opportunities begin to emerge. Workflow becomes easier, monitoring and automation become easier. And interestingly, AI in the modern world becomes more practical because it finally has a trusted and traceable data set to work with. Without that foundation, AI is often just another layer sitting on top of a fragmented process. The real opportunity comes in when AI is embedded into a structured operating model rather than bolted onto an unstructured process. So what I want to do next is to get us into a real world use case. What I like about this example is that it brings together many of the themes we've already discussed. Governance, data, execution, evidence. The organization operates across Chile, Argentina, and Uruguay. It has intercompany licensing agreements, shared services, cross-border transactions. None of those are unusual. Most multinational groups have similar arrangements. But the interesting question is, how do you operationalize them? How do you move from a policy document to something that works consistently in practice? Michael, perhaps let's start at the beginning. Before any calculations are performed, before data is collected, what needs to exist from a governance and policy perspective?
What we like to start with is determining what's the right transaction model for the group in the current environment and taking into account what the group's looking to do in the future. So there's three questions I always like to ask. The first question is, how are you currently operating? How are you currently doing business? Where are your people? Where's the value being created? The second question is, what are your strategic objectives? What's the direction that the group executives are heading in? And what are you wanting to achieve in 5 years from now? And the third one is, what are your value drivers across the group? By understanding those three elements, we're able to put together a really good, sustainable transaction model for the group to apply going forward. That forms the important foundation for setting up, determining what information you're going to need ultimately, and then setting up your calculations that need to be applied.
Excellent. Now, I think one of the key things there is that is transfer pricing teams managing these different parties, right? You've got the execs who are involved, you've got business development, you've got operational people who are going to be providing intercompany services. There's a lot of people to be able to engage with and to keep happy. And I think we often look at this model as kind of like a left to right flow, but we're going to get into the data portion of it now. But there's also information that needs to flow back up, like to inform policy and perhaps change policy and to be able to get that information through. It really talks to your example that you gave earlier, where your TV stakeholder was like, no, I sleep well at night because I've got the information that I need. I can present it to the execs and they make an informed decision. If you're not able to do that, then you're sitting there having to try and kind of like make these decisions off bad data.
And it's not to say that there's no risk involved. Like, I think there's inherent risk, right? We're never going to take away all risk at all. But how do we get in the best possible control of the data of our organization? And that's what we're trying to help clients get into the position of.
Awesome. So what I find interesting about this next step is that the challenge is no longer policy, right? The policy is in place. It's now data. Where does it come from? How reliable is it? how do we connect operational activity back to financial outcomes? And how do we create a single version of the truth that gets used across various pillars of reporting? As organizations become more complex, those questions become increasingly difficult to answer. I mean, financial data sits in one system, operational data sits somewhere else. Tax teams often find themselves trying to reconcile multiple versions of one reality. And that's exactly why the data foundation and traceability capability becomes so important. It's not just about gathering the data, it's about creating confidence in the data, that you're able to trace a number back to its source, and about understanding how that number was transformed across the way. It's about creating a foundation that can support transfer pricing, CBCR, Pillar 2, without having to rebuild and regather that data every time. April, perhaps you can talk us through how you've seen organizations typically approach this challenge.
Thanks, Chris. Yeah, so with a lot of clients that we see at the moment, I think the headache that they're dealing with is, having a lot of the calculations and a lot of the data sitting in spreadsheets, right? So one example that we have at the moment with a particular client is that, there's various management fee calculations that are performed at a group level, and these charges are pushed down to the subsidiaries. The calculations are firstly, done on very manual spreadsheets. It pulls in from various sources, from the ERP systems, and at a cost center level. There's various service providers involved in providing the services that then, where the charges are then pushed down. But what we saw was that recently there was a shift in responsibility of teams in terms of who needed to perform the calculations. And there was a lot of questions around, the underlying source of the data, the rationale for including certain cost centers and excluding others, the rationale for providing certain allocation keys over other ones. So where you have situations and you've got data coming from multiple spreadsheets, you have difficulties about the continuity of the continuity of treating your transfer pricing policy and the implementation. You have difficulty with understanding and having a strong source trace back to where your data came from. The other element is then, how do you defend the data, and how do you provide the evidence if a revenue authority then requests the rationale as to why these certain costs or charges were included in the cost base and charged down. So yeah, it's moving almost from that very manual spreadsheet process, where it'll be important to actually have it embedded in your data and your systems. That's where I think the link and the key to success would be.
Excellent. I think what strikes me with the data collection and the foundation is that we're not just collecting information, right? Collecting information is one thing, but bringing it into a structure and creating that traceability is key. We're looking at creating a fund. We're trying to here in this model create a foundation that can support multiple reporting and compliance requirements. That's what really allows the organizations to move from data collection to operational execution. And for me, this is where this use case becomes particularly practical, right? Because you want to be able to bring in all these different data sources. You don't want to be able to have like the brittleness of that's a good word, brittleness, but the brittleness of another spreadsheet, because spreadsheets can be notoriously brittle. But also, you don't want to have this kind of black box system that you've just got to kind of like absolutely trust that, okay, whatever goes in comes back out. So it's really about bringing all the data together and then being able to allocate and segment based on a range of operational, sales, and financial data. So once a process becomes structured and repeatable, and you've got this data, then AI can actually start playing a meaningful role, right? It won't necessarily replace professional judgment, but a really good use case that we saw, a case that we saw in this use case was that the guys were bringing together financial data and their orders data and some operational data. And what happened is that there was a step about 5 spreadsheets in that would allow them to kind of reconcile that their data was accurate. And if it didn't match, then they had to go 5 steps backwards to try and figure out, well, is there a new line item in the GL? Or is there a new product type that's been brought into the orders, right? And instead of being able to identify that upfront when gathering the data and validating the data, they were having to go all the way down the process, reverse back, fix something, and then go all the way back down. And that was just kind of one of the use cases that we saw, examples that we saw in this use case. So just a reminder to our our audience is that if you do have any questions, please do pop them into the chat, and we'll be happy to get to them as we go. But before we move on from this, I mean, Michael, when you think about allocation methodologies, what makes them defensible from a transfer pricing perspective?
Well, for an allocation key and an allocation methodology, you've got to take into account, well, what's appropriate for the business, first and foremost. It's got to talk to the extent of value being allocated to that entity. Secondly, it's got to be able to be calculated accurately and consistently. And thirdly, you've got to be able to show evidence for the allocation key. Chris, the other thing that I wanted to just highlight briefly in terms of decisioning, monitoring, and execution, and the importance of this process and automation element. There's a mixed blessing. We have for years, us and our clients, we've been trying to elevate transfer pricing to higher levels within the organization because it's such an important topic. And for many organizations and many of our clients, it has become a topic that more senior people are asking questions about. The reason why I say it's a mixed blessing is when they are wanting to make a business decision, they want an answer today or tomorrow about what they've got to do. So we having clients say to us, okay, the executives are wanting to change the price of these products or these services. Will it be okay if they increase it by this or they decrease it by that? And you've got to give us an answer quickly, which means we've got to be able to scenario plan. We've got to be able to adjust the pricing in the system to see what the answer is, not rework and take time to check the models and systems, because decision makers are wanting a lot more agility with figuring out the potential pricing implications. So that for me is a really important consideration. The more we can try to automate some of these processes, the more we can be in a position to respond to the very tight turnaround time required by the business.
Yeah, that's interesting, Mark. I mean, in theory, a lot of this should be able to be achieved using Excel, right? I mean, I'm sure everyone on this call has done many a VLOOKUP in their life, and but where do you see the kind of like the Excel-based processes falling over or falling short of what the TP teams in your client base need?
Well, when you have a massive workbook with many different columns, and you've got someone who's been working on the system for many years, and they know the system. Well, if they're sick or they're off or if they leave, or if they have an off day and the cells are not all updated and adjusted correctly, we have seen errors coming through with the bottom line because cell referencing are problematic. And little things like that. It's nothing's intentional, but that can cause big distortions in the numbers when we ultimately try to show evidence and work backwards and show the proof and support to the revenue authorities.
I think a key thing there is being able to show the evidence, right? Because information can sit in spreadsheets, but spreadsheets get lost or they don't get saved. And I think one of the key things, like we said, we're going to talk a lot about the build and how to actually execute this. I think if there's one word of advice that I can give from what we've seen, it's like you want to be able to get your data into a place where it is persistent, right? So that kind of means it stays there, it's in one place, and it's not moving around in spreadsheets or in files. So you want to be able to get the data that you need into one place, and then you want to be able to reference and use calculations on top of that data. I think too often what happens is that calculations are like kind of happening in the data as you're collecting the data. But what you really want is you want a good kind of data set that you can set your calculations on top of. I think that's like one of the big pieces of advice that I would give based on what I've seen in implementing this model. So, April, I just wanted to kind of get into like the final kind of like certainty side of it, and how how having this data available and having what's the word I'm looking for? Sorry, I lost my train of thought. Transparent. That's the word I was looking for. And having transparent calculations really helps to bring confidence to this final kind of step of the model. Confidence that the calculations are correct, confidence that they can be explained, and confidence that, like, if there's an issue in the future, that the evidence is there and can be easily referenced. Historically, much of this kind of validation, from what we've seen, has happened manually, right? There's a result, and then guys almost have to go and redo the result to double check that they're confident in what they've sent when a question comes in. So when clients are preparing for audits or responding to revenue authority questions, in your experience, April, like, how much difference does it make when the evidence has been captured throughout the process rather than kind of just being kind of like assembled afterwards and submitted based on a question being submitted from a revenue authority?
It makes a huge difference, Chris. In your former example where, the time is spent in terms of gathering the data, there's most of the time, organizations are spent scrambling and trying to find the evidence. So going back and pulling emails from potentially people that left, a couple of years ago, going through archives, looking for KPI documents that might be saved in a particular spot on the shred drive that's not in a very easy to find or saved in a logical manner. Sense checking the calculations or just collating it together and finding invoices. And given the time frame that taxpayers tend to have when you're responding to revenue authority audits, there's not a lot of time for you to spend interrogating, understanding the data, and also understanding what are the shortcomings of the data before you hand it over to the revenue authorities. Whereas if you look at the latter example, if you already have your evidence on hand, if you already have your defense file in place, if you already have your data all stored in one central repository and it's available, there's more time for organizations and also the advisors to interrogate it and understand it and perform, get your defense ready position a lot more tighter and stronger. So you can already sort of anticipate what are potential follow-on questions that revenue authorities might ask based on the initial set of information that you're providing, and that you can prepare yourself appropriately for the follow-on discussions or requests that might take place as a result of the data that's been provided.
Thanks for that, April. I mean, Michael, if you think about evidence, controversy, and certainty, in your mind, what does good preparation look like before a revenue authority letter arrives?
Well, Chris, I think it depends on the scale of a business and an operation. I think the smaller a business is, the easier it is to be on top of everything, and then to also just monitor things and address things. The larger a business grows and the more countries and more transactions an organization expands into, the more it's important to make sure we have processes in place to ensure we have the support and the evidence, because otherwise things will fall through the cracks. Inconsistent explanations will come up from one country to the other, or one market or one entity to another. So the larger the organization gets, the greater the need for a more automated approach from a data point of view and gathering of information. You need better processes to gather information. So first prize is definitely to have a file of all the relevant information at the time of the transaction. But realistically, you've got to see what's practical and what's feasible. But what I would say is, the larger a business gets, the more it's becoming more and more and more important for our clients that are in rapidly expanding businesses or very large complex businesses to have good processes to automate certain parts of the data and the information gathering process.
Excellent. Well, thanks for that. So I think one of the questions that often comes out of discussions like this is, where do we start? So most organizations don't need another presentation explaining the problem, right? They understand the problems that they're having. What they need is a practical way forward. And that's exactly why we've worked with Graphene to develop the TP Ops Model Accelerator. It's a focused working session designed on identifying a priority use case, understanding the current state, and then we'll work with you to develop a practical roadmap towards operational enablement. The goal isn't additional complexity and complex workshops, it's clarity. It's about working with you to understand your space and to be able to bring clarity to how to take those next steps. So if you are interested in a workshop, there will be a poll popping up. Please, can you just let us know if you would, and we'll reach out to you after the session based on your feedback. We'll just leave that poll up there. Please just you can answer it at your leisure. So as we're wrapping up, as we come to the end of the session, I just want to kind of look back at some of the pressures that we discussed at the start. So disputes, data quality, operational transfer pricing, and uncertainty and AI adoption. I think the conversation looks slightly different now. These are not 5 separate issues. They're connected. A weak data foundation makes operational execution harder. Poor execution makes evidence harder to assemble. And weak evidence increases controversy risk. AI only becomes useful when it's embedded inside a process that has structure, governance, and review. So one of the biggest insights that I've taken from today's discussion is that these aren't separate capabilities, and AI, it's a hot topic at the moment, it itself isn't a separate capability. All of these work together, right? The model and AI and the data collection become part of how the capabilities operate. The model helps organizations move faster, improve monitoring, strengthen controls, and surface risks much earlier. But you can only do these things when the underlying operating model is mature enough to support it. So for me, the operating model is the response to those pressures. It gives organizations a way to move from scattered activity to something far more coherent, more repeatable, and more defensible. So as we wrap up today, there's kind of like just 3 observations that stand out for me. Firstly, transfer pricing is becoming increasingly operational. Secondly, the quality of the outcome is increasingly dependent on the quality of the underlying data. And thirdly, certainty doesn't come from documentation alone. It comes from governance, data, execution, and evidence all working together. I think just as we wrap up, just maybe an observation from me, and then I'll hand over to, or Michael, any observations from you, perhaps first, as before we wrap up, and then I'll give my final kind of thoughts. Michael, I think you're on mute.
Things I should know by now. And Chris, yeah, I've thoroughly enjoyed our discussions on this important topic. It's something that I think is a practical takeaway, and that I'd encourage everyone on the call to do is have a look at the scores that you gave your organization in terms of the 5 areas, and use it as a moment to reflect and see, is there any intentional action that you and your team should work on certain areas that, our lives all get so busy. And sometimes we focus on the most pressing or the biggest fire that's raging at the time. But are there things that you can be doing on some of the areas that maybe are scoring a little bit lower to prop them up? Because the reality is, the stronger we are across all 5 of these areas in our organization, the more we reduce the stress that comes with the complex transfer pricing environment we're operating within.
Excellent. April, any thoughts from you?
Yeah, for me, I think what's what has been very interesting, seeing how the use of AI has evolved over time. I think a lot of people, when they think about AI, they still think about ChatGPT and prompts and, getting something in. And that can be powerful in some respects. It can also go fairly south when you're trying to put together an AI policy and it's you're not fully fact-checking the evidence or the support against that. But where AI is very powerful and where you can use it well is, and you mentioned it a bit earlier in the session, is the repeatability of the process. And we've really seen the power of that when, we've been looking at some of the embedded AI in the platforms and the systems that we are using. So, where you have very unstructured data and you have a particular rule set, yes, it takes a bit of time to set up the actual rule set. But once that is set up, the repeatability of your process is very easy to do. And I mean, I think where it all came alive for me is the one client that we've been working on. They acquired 50 new entities over a reporting period, and we had a very short space of time to assist with some tax provisioning that they needed to provide for audit process. And within a couple of minutes, the various TBs were uploaded and mapped. And, whereas if you think about 2 years even ago, that would have probably taken weeks to work through and understand and, embed into the system and the process. So yeah, it's been a very interesting journey, I must say. And I'm going to be keen to see, how AI continues to evolve in business.
Yeah, thanks. I mean, it's such a hot topic at the moment. But what was really interesting for me, I mean, when we started on this series, I think to my mind, AI was actually going to be a bigger part of it. But it's actually it's a more subtle part of it, right? It's actually become ideally it's part of the fabric. It's not like this outstanding. Okay, we're plugging AI on. It's got certain areas and certain tasks within the end-to-end process where it really does add value, but we're still going to be very reliant on specialists and subject matter experts having the final call and making the judgment calls. AI has got to be a facilitator and a helper to be able to process the data, validate the data, so that the subject matter experts can really make the right judgment calls. So yeah, on that note, I'd like to say thank you to our audience members for joining us, and we hope that you got value out of today's session. And to Michael and April, thank you so much. Really appreciate you guys taking the time to join us and to impart your knowledge and experience on us, and for your efforts. So to everyone, have a good day. And we look forward to the next series. We'll be in touch soon.
Thanks, Chris. Thanks, everyone.
Thank you, everyone.